No surprises here. The Vancouver real estate market is in a tough spot right now, and we just had one of the worst Novembers on record. I'm Blake Chancey with Real Broker. Make sure to hit that like and subscribe button. So with these stats, a lot of people are asking the same question. Is this the correction that everybody's been waiting for, or is this just the start of a much bigger slide? Today, I'm going to be breaking it all down using custom graphics I built myself from the Real Estate Board of Greater Vancouver data. You won't see these anywhere else. We're going to look at what's shifting, what the next 90 days could realistically look like, and what all this means for buyers and sellers across Greater Vancouver. So let's dive in. Looking at 10 years of November sales, a lot of the headlines right now are comparing November 2025 to November 2024 and saying sales are down. And that's true, but honestly, comparing one year to another doesn't give you the full picture. So instead, here's the last 10 years of November sales. You'll notice that these numbers bounce all over the place. 2015 was busy, 2019, 2020, 2021, also strong. And then we get to 2024. That's where the momentum was building. Optimism was high and people were acting like the market had turned the corner. And you know what? At that time, it actually felt like it. Then comes 2025. Tariffs hit. Uncertainty spiked like I've never seen before in my career. And that optimism evaporated almost overnight. Now, while 2025 was slow, it wasn't actually the slowest of the decade. It was the fourth slowest. 2017, 2022, and 2023 were all worse in terms of pure sales volume. But here's where things turn. Inventory changes absolutely everything. When you pull inventory into the conversation, 2025 becomes a completely different story. Inventory this November hit 15,149 active listings, the highest level we've seen in the last decade, maybe ever. I didn't look that far back. So by comparison, 2017 had fewer listings, 2022 and 2023 had fewer listings. Even during previous slowdowns, the supply didn't stack up quite like this. This is probably one of the biggest reasons why the market feels so heavy right now. It's not just slow sales, it's slow sales combined with record level inventory, and that gap is what puts real downward pressure on pricing. Months of inventory, the graph that really tells the story. Months of inventory equals how long it would take to sell everything available at the current sales price, also called an absorption rate or active listings to sales ratio. Right now, we're sitting at over 8 months of inventory on average, which is a massive jump. To put that into perspective, the next closest year was 2023, and that was just over 6 months. That's still a balanced, too soft market, but 8 months, that pushes deep into buyer's market territory. Now, what makes this even more interesting is November inventory was actually lower than earlier in the year. So this big spike in months of inventory isn't happening because supply went up. It's happening because sales dropped off a cliff. Right now, there's just not enough sales happening to work through the current inventory on the market. That's exactly what we're seeing, and that's why we're seeing these numbers jump up so high. So new listings, a bit of the silver lining. If there's any positive news here, it's that new listings weren't as high as previous years. 2024 actually had more new listings than 2025, and that checks out. In 2024, people were confident, excited, ready to time the market. 2025, not so much. Plus, November is always slower for new listings. Nobody wants stale listings sitting through December when buyers disappear for the holidays. And I can tell you personally, I've got multiple sellers who pulled their listings for the season and will relist in January or spring. That's a whole nother issue that I'm not going to dive into today, but will in another video. And this is pretty normal. This does definitely mean, though, January and February could be very active on the listing side, and that will matter a lot in terms of pricing for the future, and probably will continue to see a ton of new listings in the spring, especially for detached properties. So detached, townhome, and condo prices over 10 years. Let's talk about prices. Detached pricing. Detached homes have taken a noticeable step down. We're almost back to 2021 pricing. The benchmark then was $1,870,000. The benchmark now is $1,900,600 and trending downward. So detached homes simply got too expensive, even with interest rate cuts. Families just can't stretch that far. I never thought we'd be hitting these kind of numbers, to be honest. Townhomes are actually holding on better than any other product type, not because they're cheap, they're absolutely not, but because they're still within reach for families upsizing out of condos, so demand is steadier here. Condos, this is where the biggest shifts are happening. Prices have dropped back to 2020 and 2021 levels, and that makes sense. Investors have been leaving the market, presale collapses are spilling into real estate, rent is dropping, oversupply is building. condos are definitely feeling it the most. Comparing November 2025 to other months this year, sales-wise, November is one of the slowest months of 2025, similar to February and March. And that was really driven because the tariffs hit and uncertainty took over not just here, but kind of globally. October was actually a fairly strong month, one of the busiest months of the year, but November flipped immediately into one of the slowest. This tells me that buyers are stepping back to wait for more inventory, lower prices, lower rates, and a general calmer economic outlook. Quite frankly, I don't blame them for thinking that way. Inventory also dropped a little bit in November, but again, that's normal. Sellers hate listing through the holidays, but sales dropped so sharply that months of inventory actually increased, even though total listings fell. So that's how slow November truly was. So what happens next is the big question I'm getting. The truth, nobody can ever predict what's going to happen in the real estate market or with interest rates or anything in the economy, but here's the data, and here's what I'm personally suggesting. December will be extremely slow. January will probably bring back a lot of new listings for some buyers. Some sellers are hitting their breaking point, and deals are happening right now that weren't possible 4 to 5 months ago. I'm seeing sellers who are firm in summer now and saying, just get it sold. Let's move on. I don't want to be stuck in this place forever. I want to move on with my life. And that's what happens because of all this pressure from more listings driving prices down month over month. Although a lot of people think that interest rate cuts will spark the rebound that sellers are hoping for, this just isn't the case. Buyers are way more thoughtful, more cautious, and more patient than ever. Now, how is this affecting the rental market? Rents are dropping, and that's a huge signal. Across Canada, we're down 2.2% year over year. In Vancouver, down 7.4% year over year. That's huge, especially considering we've now had 15 months in a row of declining rents. So lower rents equal lower investor demand, weaker cash flow, less upward price pressure, and more inventory sitting longer. Until rents bottom out and rebound, the condo market especially is going to feel this the hardest. So wrapping up, I'll keep updating these graphs month to month so you can stay ahead of what's coming in 2025 for the rest of the few weeks and 2026. If you found this breakdown helpful, hit that like button, subscribe. It helps the channel grow and lets me keep bringing you data-driven content like this. And if you ever need real estate advice here in Greater Vancouver, reach out anytime. My contact info is going to be below. Thank you so much for watching, and I'll see you on the next one.